Welcome to the market recap presented by Tackle Trading. Get in the game.
Good afternoon, Tackle Traders, and hello, YouTube. This is Frank coming to you with the market recap for Wednesday, the 6th of March. A little bit more selling across the board in the marketplace here today, as resistance has just proven to be real tough. We continue to glide to the downside, seeing more and more selling, and starting to see some sell signals on the intraday generating in a couple of areas. We'll have to take a quick peek at it. Good afternoon, Ryan. Great to see you, my friend. Welcome, everybody. Hope you all had a great day, both in and out of the market here today. On the earnings front, really light. We've got an H&R Block. We've got a Kroger coming out tomorrow before the open, but a pretty light slate of earnings this go round. Nothing too dramatic one way or the other, as we're kind of, in that little off season. But before you know it, now we're in March. It's only a couple of weeks until we start saying, well, it's just about earnings season again. So as we look at our overall market, here we are on the 15-minute chart on the S&P 500, kind of just sold all throughout the day for the most part. Started to put in a little bit of a bottoming type of pattern at some support at around that 1270 marker, or 2770, 1270. Wow, that's a long ways away. 2770 marker. We do have quite a bit of support around 2765 on an intraday, from an intraday perspective on the S&P 500. Don't think we're seeing a ton of signals just yet, but a break of that would be another little sell signal. At least in my mind, it would be. So something to keep an eye on as we work into tomorrow. Now, not too far below that is going to be our 200-day moving average. So definitely some stuff to prop us up. But we're still kind of seeing sellers take a little more control. And good afternoon to you, Patricia. And hello, EJ. Great to see you guys. I hope you're doing well. So keep an eye on how this performs around that 2665. I have a hard time saying it's a clear sell signal personally, but maybe that's just me. We do have the 200-day moving average right around 2750 to hold us up. And of course, our previous swing low is still way down here. But it looks like we're kind of developing into a bit of a pullback, excuse me, making me like the break of resistance a lot more, even if it makes it a little less likely that I ever get it. So more selling, as you can kind of see here, we're kind of hanging around on that intraday support level. We are starting to see our 9 EMA flip around, seeing a little bit of negative or bearish momentum coming into the market because of that. Again, broadly speaking, I can't say that this is a bearish chart. I do understand that it's at resistance, and I do understand there's no great buy signals for tomorrow, at least in my opinion, but I wouldn't feel comfortable going bearish on the overall market at this point in time. But we are seeing the sellers take a little bit more control. We still have lots of stuff to prop us up, whether it's this intraday support, the 200-day moving average, our resistance point from back here around 2740. Our trend is still intact. So a little deeper pullback would not necessarily be a bad thing in my mind. And honestly, I'm perfectly happy to see that happen. We will have to see if we get it or not. Obviously, we now know if we didn't believe it before, every day that passes, we probably believe it a little bit more, that this resistance zone just above 2,800 is kind of a big deal on the S&P. So I don't really think you're seeing tremendous signals from a seller's perspective. Now, I don't think you can not be bearish on anything. You saw, Goodyear Tire, big down day. CVS continues to fall. So there's definitely some interesting bearish, individual components. Broadly speaking, I have a hard time at least thinking about the market as bearish based off of the price action we've seen this week. Just not bullish yet. So, but at resistance, that does make sense. Really similar type of situation over in the NASDAQ here. Not much different than the S&P 500. We're still hanging out right below resistance at 7,200 approximately. Another day of pretty good selling as far as who won the day, nice full red body candle. So a little bit more. Exactly, Ryan. I mean, I'm not unhappy to see a pullback at all. I'm really not. Textbook pullback would be okay. We've not got any, turnaround signals just yet. So while I do believe that this is just a pullback, at least that's based off what I see today, I don't think we have any strong reasons to believe that tomorrow is the day that the buyers all step back in. It might work out that way, but I don't think we've had that candle and that price action that would signify that just yet, at least not to me. Little weaker over in the Dow, kind of developing a little bit of intraday support off of the low from Monday here. Still lots to hold us up well above our 200-day moving average in the Dow, as it kind of was ahead of a lot of these other areas. So again, to me, it's just looking at pullback, but we are seeing a little bit of more willingness to sell in the market right now, right? And we've really kind of been seeing that throughout the week. We saw quite a bit of it on Monday. Didn't really change a whole lot. Just seeing a little more likely, maybe we're starting to give up a little bit of faith, and okay, a deeper pullback's all right. So good afternoon, Lorena. Great to see you. Hope you are having a fantastic day. If this 9 kind of gives out on us, or that 20-day moving average gives out on us, which of course it may, probably the next support zone I'll be looking at is that 25,440, this recent breakout point. I still don't think that you can look at these charts overall bearish, but I do think we're seeing a little bit more bearish skew than we're used to. Now, the Russell, on the other hand, I think you could make a case. Big down day for the Russell here today, while the other indexes were, down a little more than 0.5%, nothing really major, as far as movement is concerned. But, we kind of started selling and we just kept selling, closing, well below the 20-day moving average, well below this old resistance level. I think this is a clear sell signal, to be quite honest with you. Now, do I think it's a bearish signal to enter bearishly on the rut? I don't think so. I need that next move, right? I need it to run up, make that lower high, and then break that low. Then I will say that. I don't think you can say that just yet, but I do think I will interpret this as a bearish signal because of the failure at the 20, and that's not the big deal. But couple that with this old support zone, this old resistance zone, kind of fell right through it here today on a day where the rest of the market was selling, but not tremendously dramatically. We kind of sold here. We definitely lost some footing here. So I think we want to be careful from a bullish point of view right now with the Russell. Breaking back above that can absolutely change my mind. As you guys know, that follow through is always the big thing for me. And hello, Whitney. Hello, Emily. Welcome, guys. I hope you are doing well. I think we need to be careful right here. We have that, we're below all of our moving averages. We failed at resistance. If you look at this on an intraday chart versus, say, the S&P on the intraday chart, it's a lot more, that's a pretty bearish looking chart, right? If we just think about it, hey, we're just 15-minute traders. That's all we think about. This is a pretty bearish looking chart right now, below everything, breaking support, lower highs and lower lows. So until we kind of stop that, I'm going to have a hard time thinking bullish about the Russell. That may happen tomorrow, but as it's currently constituted, I think this was kind of a sell signal, to be quite honest with you. I don't really see it a lot in the other indexes, but I feel like it is here in the Russell. Over in the sectors, the material sector seemed like it wanted to move today, but it just was not meant to be. Most importantly, we are continuing to hold, that old breakout point in that 20-day moving average as we're kind of developing a little bit of a short-term trading range, it looks like, in the material sector. Not a lot has changed. In my opinion, the numbers are still the same. 56 at resistance, the old high, the 200-day moving average. I think a break of this low that we put in here on Friday could be considered a sell signal with the way things have kind of developed. I don't know that that'd be a bearish signal as much as just a don't be bullish signal to me. Right now, I probably would lean just don't be bullish, but depends on how much longer we hang around in this range, right? So we'll see where this one takes us. But most importantly, right now, we continue to hold. It did seem like it wanted to get going here today, closing up in the green, one of the few areas to be able to close technically up on the day. Really, I don't think our numbers have changed all of that much. 54.50 and 56 as support and resistance, respectively, at least for me. Moving into energy, having a hard time getting going, but in the process, I actually think it's done a huge favor for us. And the reason I say that is, we've watched this resistance zone develop over the course of this week. Right, we know we have that break. We know that we've been holding that breakout point pretty nicely, regardless of what the market's done. We've not really ran, but we've never done anything wrong from a technical point of view, at least to me. Now we've actually seen some clear downward movement off of that resistance that we've set up this week. which opens kind of the door to a break of resistance, probably a pretty good signal. I don't know that buying off of the support zone here is something I would be comfortable with. I do continue until it fails. I will continue to expect this old 65 support zone to hold. So I couldn't fault somebody for thinking buy as we approach that zone. But actually now, with the way the price action has developed this week from the last couple, I actually think a break of 67 actually ends up being a really nice little short-term bullish signal. I don't know that we're going to get it. We will have to see. It's starting to develop into, well, hey, going to break one way or another one of these days, right? Probably not tomorrow, but eventually probably going to break. And I could see an argument, while I think the signal above 67 would be a stronger buy signal than a close below 65 as a sell signal, I could see the argument for selling below 65, a close, of course, at least for me, a close. Really sideways, having a hard time getting going here today. I love it. I love when things get stuck in these little ranges for a long time, or at least relatively speaking, a little while. To me, it feels like they're building up pressure whichever side ultimately wins. I feel like that's a really good signal. That's one of my favorite things. I love things that do nothing for a long time and then do something. That's my style. I'm really boring that way. Beyond our 67 and our 65, really probably 69 or so, potentially even that $70 marker where we have our 200-day moving average, our next significant levels of resistance. I think you kind of want to keep an eye on this as an area. This is exactly how it was behaving last spring or late winter, however you want to call it, where we just kind of kept bumping our head and stuck in this little range, little tighter range right now, but same type of back and forth movement that we saw last year. So I'm liking the way it's potentially setting up. It's just not there yet in my mind, and certainly not a great day today, working all the way back close to that 65 marker. We're having a hard time running in this sector right now. Holding, not much of a problem so far, but running been a big deal. Over in financials, little more selling here today. And the way it's kind of developed for me in the financials, we're still seeing the sellers in control in the short term, but not really a ton of clean sell signals. But I think what it's kind of done for me is kind of pushed me into, I'm looking for breakouts as opposed to pullbacks across the board of that break above resistance. Probably a much more comfortable signal for me. Not to say I would be completely opposed to pullbacks in the sector, but if you look at things like Bank of America, you've got a very clear top, very clear potential breakout. I'm pretty sure these guys were in our, I want to say, stock report this week. Doesn't look like they're going to hit the entry price, but a breakout, still a breakout. It doesn't have to happen this week. A pretty solid break out Canada in my mind. That'd probably be lining up with our XLF ETF breaking that level of resistance. Seeing really similar things on things like Goldman Sachs as well, where a very clear, this is resistance, break above it is a little bit of a bullish signal. What we do about that, that's up to us, but I think we'd all interpret it as such. I really think it's more, in these areas, a couple of these areas, it's more breakout or bust and not as open to the pullbacks as I am in certain other areas. But that leads me to really like the breakouts, and that's okay. That's okay to do. It's a little more selling, not any turnaround. We're not really going to see any turnaround candles here. Although interesting, I didn't want to forget this. Interestingly, on the intraday on our energy, we did end the day with a nice double bottom on the 15-minute time frame. So a pretty clean bullish signal on the short term on that energy ETF. That makes sense. I mean, the support zone, it's just been a good place to buy, right? Ever since it stopped being a good place to sell. So I did think that was interesting. We are seeing more selling in the industrials. Don't think that's a big deal. Think it was probably warranted. Very interested in pullbacks in the industrial sector, whereas financial, I'm leaning more breakout, and even energy, I'm leaning more breakout. Industrial, I'm pretty excited about, retracement opportunities, but I don't think we can say that we should expect them to happen here tomorrow. If you look at its price action on the intraday, again, very, very weak. There was a lot of profits to take in industrials, and to me, that's how I'm reading this thing right now. A lot of profits to take, pullback occurs, easy for the big winners to take a little bit more of a move to the downside, I believe at least. Still very clearly bearish on that short term, which just leads me to believe that the pullback isn't ready to stop tomorrow. As long as that pullback is higher than $74, or let me rephrase that, $74 or higher, it can test that breakout point if that's what it needs to do. I'm very excited about pullback opportunities in the industrial sector personally. And we'll have lots of room. Even if we develop this tomorrow, maybe a small body candle tomorrow, little upward confirmation movement on Friday, still we've opened up quite a bit of room until we work back into that 77 resistance, which of course is a big deal. We know 77 matters, right? So at least it's proven to matter so far in the industrial ETF. I'm really liking this. Don't really see a scenario where, broadly speaking, it's happening tomorrow, but as long as it's above 74, I am very interested in the pullbacks personally in the industrial sector. I'm very happy to see it. Over in tech, a little bit more of the same, much like the NASDAQ, almost even the same number at $72 at resistance, right? Not a whole lot to see here that we haven't been seeing all week long. Held up maybe a little bit better than other areas in the market today, but a little bit more of that slow drift to the downside. From a support point of view, probably $70 is probably the first place I'll be looking, or approximately there at that rising 20, at that flat 200 period moving average, old level of resistance. We had a pretty easy time once we took that out, kind of filling up that space. So I believe we can kind of look at approximately 70 or 70 down, or 69.50, I'm sorry, down here as our support level. And as long as we're there, pullbacks are very interesting in this area, in my opinion, as well. Did see some weakness in some of the chip makers today. Some of the charts aren't quite as pretty as maybe they were a week ago, but overall the sector is still appealing. Above 72, a good solid signal too, in my opinion, from a breakout point of view. But the way it's developing could be a pullback area for me as well. Staples, you are still just say hello. I say hello to you with you guys. Because I feel like I should, but I have really no interest in this area right now as it continues to churn back and forth. Very little rhyme or reason, broadly speaking, still holding below that resistance. Really not a whole lot has changed. As long as we're below here, I'm not a buyer. As long as we're, above this breakout point, I'm not really a seller. I'm open to individual components as always, and as usually the case within this sector personally. But we're really just kind of stuck in that range. And until we decide one way or another which way we want to get moving, it just has really no interest to me personally. Maybe if we see some more selling, maybe folks will want to get defensive and go into a more defensive sector like the staples. But if that's the way it goes, it'll probably run into resistance. And hey, if it's that big of a deal, it'll break it. At least that's how I'm looking at it. Very, very not interested personally right now in the staples sector because of that just really choppy, undecisive movement right below a major level of resistance without really clean sell signals to make me excited as a bear, but certainly nothing to get me excited as a bull. Just another day for the utility sector. We had several of the S&P 500 companies that hit new 52-week highs today. There weren't a ton, maybe a dozen or thereabouts, but probably about half of them were utility stocks. So just another good solid day overall in the sector, really kind of flattening out on the ETF as it tries to hold that 57 break. Really not a lot here to see, I don't believe, just yet, other than, yeah, it's very strong. Yes, we're breaking resistance. Yes, a lot of the components are hitting new 52-week highs on a pretty regular basis. Still holding above short-term averages. Slowed down a little bit, no doubt about it, but we really filled 55 to 57 quite fast, I think. So taking a little breather is not necessarily a bad thing. Looking at a little maybe consolidation before we try to break, cleanly out of that 57. I don't know. I wouldn't mind that. We'll see if that's what we get. But really just kind of a little bit more of the same in the utility sector, just kind of holding its own right above resistance, but not really seeing a ton of movement. As it is a little bit extended, maybe a little timeout's not a bad thing. Our healthcare sector, this was the one area that on our daily charts, I think clearly changed for us here today. We've been seeing a lot of weakness in those healthcare plans. We saw some of it trickle over in some of the biotech stocks here today as well. Cleanly taking out this old breakout point that had been holding. We've seen a lot of movement off of it this week. When that fell through, let's go into a 15-minute time frame. When that fell through, it just went, right? You had some slight buying, maybe short covering at the end of the day. But once that gave out, we weren't the only ones looking at that price, apparently. And then no surprise, that was a pretty regular occurrence these last couple of days. That's a clean break of a support zone. Now, again, is that enough to go bearish on the overall sector? I don't believe so. But I do believe it is enough to really step back from a bullish point of view. I'm still open. I'm still seeing a lot of, some things looking terrible, some things looking okay. I mean, Merck looking like a nice pullback. ABT having a really nice pullback, potentially developing, in my opinion. You've got, Johnson & Johnson holding up fairly well. Healthcare plans, we all know how ugly those guys have been looking the last little bit. But we're, seeing some movement to the downside. I do think, we can look at this as a stock pickers area for the time being. I'm not bearish until we, break our trend. And I don't really believe that we have, although I could understand the argument. I really, really could. But from a bullish point of view, I think this is a pretty respectable sell signal. As long as we're below that, I think we want to be a little bit careful from a bullish point of view. At least that's how I'm going to be behaving. Individually, I'll be fine with, personally with those nice stocks, the Lillies that have been in a nice upward trend. I know not a beautiful pullback developing on Lilly right now, but a little bit of a pullback. The Mercs, nice solid little pullback potentially developing after breaking an all-time high. Probably my favorite, at least today, is ABT. After a nice clean break not too long ago. I know these guys were in the report. They took a while to get going. I think they were one of our reports like a month ago. It took them a while to get going. But developing a nice little 3-day pullback, still above everything. So still some very appealing things out there. But then you see things, like UNH. UNH is hanging out right at a pretty major level of support. We're not quite there, but we're close. So I think this is going to continue to be a mixed bag for me. Overall, I will be very cautious and I will be trading into strength. As always, I'm not looking to pick the bottom of things. I'm not very good at that, nor do I really plan to be. But this clean break of this support has to kind of throw at least a little bit of fear into the bulls, I believe. We were going sideways, looking really nice. A little bit of trouble with some of those healthcare plans, and it's really started to potentially trickle in to some of the other areas. So bullish or bearish, I'm perfectly fine either way. I can't be bullish on the healthcare plans right now. I'm going to stay completely away from them, no matter what their bullish signals may look like, and it'll take a while for those to develop. So I probably don't have to worry about it. But other components, I really am comfortable on either side. Just keep an eye on how we respond from here, because this is the first time that we've really failed anything in the healthcare sector. Maybe it's not a big deal. Maybe it's just a short-term thing. I don't know. But this really is the first time. Our 9 is now falling. We've broken through support. We've closed below the 20. This is the first time we've really had adversity within this sector since the turnaround, since we started to see the market recover. One of the early areas that we are seeing some weaknesses in my opinion, from a technical point of view. So, yeah, interesting day. Not. I wish it would have been able to hold, but not terribly surprised. There's just been a ton of pressure in those healthcare plans, and we've seen it on the days where they get along with the market, it goes okay. The days they're selling, if anything else has the audacity to sell, just seems like a down day in the sector. Another sideways day, a little more selling, but nothing really to change here. Still very much in a sideways range. Over on the discretionary sector. Decent earnings came out here today. Abercrombie and Fitch had a pretty good report, it looked like. So overall, this deal, I really, and I love this week. I really do. I hope it continues to do this, stay sideways or drift down from resistance, do this all week long so we can reset for next week. I would love nothing more. I still think a break of 112 is one of my favorite signals in the market that could potentially develop in the short term. That really hasn't changed. And really, as long as we continue to go back and forth in here, I really don't expect that it will. Had Starbucks try to break, but again, kind of going against some selling. It's kind of hard to go against the overall market when everything's selling. Even the good things kind of are getting pulled down a little bit that day. But still continuing to hold that 110 zone as our support, 112 as our resistance. Anywhere in between there, I think you have to be very careful. Whichever way you're looking, above or below, I could see a case. I don't really think below 110 is a good sell signal. but I would call it a sell signal if we do break the 110. But the 112 break is one of my favorite potential things that could happen in the not too distant future. We will see. We will see. Real estate, just another day in real estate, back and forth. It really is just kind of back and forth at the top of this trading range after a great run. I don't really know any fancy way to say it other than it's taken a break. It still doesn't want to pull back, but it clearly is kind of tired and is not ready to keep on running. As long as it continues to do this, I think you kind of sit back and just wave. If you own some REITs, just enjoy the collection of those dividends while it decides what it wants to do. If you're looking at the new REITs, I get it. It's been very strong, but I'd like to see it kind of come out of this back and forth before I get too excited one way or the other. Really just kind of within a pretty tight trading range, acting a lot more like, real estate than what we were seeing in February. This isn't, always what real estate acts like. Just seemed like it for a month, right? So, but I really can't make an argument to go against it. I certainly wouldn't be betting against it right now. Just looks like it needs to take a little bit of a break. Little more of the same, working our way up on the communication services ETF here, still within this range. You did have Facebook, and I checked about 15 minutes before the close. Did they hold that break? They did. They actually broke out of that swing high. Not much happened, but they were able to hold that break. That might be a little bit of a bullish signal for the market or for Facebook. Google continuing to start to try to move up a little bit. So we're seeing a little bit more movement happening in some of these big players within this ETF. We're getting close. We're getting closer and closer to resistance, and that's an interesting price point, I think. 47 is resistance, 45 is support, and I do believe either way is a good signal, whichever way it decides to break. Don't be surprised if it gets to 47 and struggles, right? But we're never surprised when we get to resistance and struggle. We just assume it's going to happen. We're surprised when it doesn't go that way, right? And hey, good afternoon, Diago. Good to see you, my friend. Welcome, welcome. So there we find ourselves, for the most part, things are holding up. You're seeing a little bit more, sell signals, short-term on the industrial sector in particular. Pretty ugly break, in my opinion, at least enough to take a big step back in the healthcare sector. I don't know that it's enough to say I'm bearish, and for me, I don't think it is. But I definitely will respect it as a sell signal. That was a pretty big break over there. A lot of our other areas really starting to be, still hanging in these tight consolidation ranges. Our market is drifting down slowly. The rut notwithstanding, it actually made it moved pretty quick today. But overall, S&P, the Dow, they continue to drift to the downside. Still aren't seeing those turnaround signals, I don't think, just yet. But again, it's opening up the door. I would love just a little bit more of this going into next week. I love when things get stuck. That is my favorite thing in the world. So I'm one of those guys, get stuck for as long as you want. So as we kind of move into the volatility index, really not a whole lot to see here. Maybe a little bit of a spike with a little more selling in the market, but really nothing of note. As traders still feel like they've got a handle on things. Over in the dollar, probably to none of our surprise, we're slowing down there at that 97 area, right? We've seen it time and time again. Bounce into that 97, break it for a day, and turn right around. That 97 has been a pretty important price on the dollar index. So no surprise that it's struggling. Major resistance still up here around that 97.60 at these old highs. I think right now you step back from you guys know me. I'm neutral until it comes out of this range. And I will say that over and over and over again until you're tired of me saying it. But that doesn't mean everybody is. I think if I had been trading within this last week, I think this is probably time to take a little step back at this resistance zone personally. Just too many instances where 97 has pushed us back down, or approximately 97 has pushed us back down. Not seeing any real sell signals just yet to believe that that's going to happen, other than it's happened many, many times. Beyond 97, and if we can push through that 97, really into that 97.50 or 90.60 range, there's not a lot of resistance just yet. A little bit of a doji at an old price that's caused us some problems in the past. Wouldn't be surprising to see some profit taking happen there. I can only speak for myself, but I know I would. If I were in the dollar index and I saw a doji at around $97, well, I know myself well enough to know that, yep, thanks for the fun. I'm hitting the road. So keep an eye on that 97 and that 97.50. A little bit slow down after a very nice, approximately week over in the dollar. Still don't think you want to bet against it, but seems like it's slowing down at resistance to me. As we look into our metals, really a second day of just trying to catch our footing. I'm going to come into, let's maybe go into an hourly chart, see how this looks for us. After our big break, right, and plummet right through 1300 on gold, starting to develop a little bit of an intraday floor. Those of us, we know what that means, right? And it's only a couple days. I don't think we can say much just yet, but these floors end up being very important potentially in these in everything, but in commodities in particular. If this drags out, we continue to build this floor. A break below it will probably lead to more selling. A break above it could be a little bit of a short-term rally. I don't know if we can say we're there just yet. We are only 2 days into it after all, but after some pretty steep selling, we are starting to simmer down and at least trying to build a little bit of an intraday floor. Kind of jumps out a little bit more if you look at it on a 15-minute chart. So I don't know that we should call it a floor just yet after really 2 days, but it does look like that's what it's trying to develop, to me at least. Seeing the same thing over in silver. Let's go into their hourly chart too. Very clean floor, probably a little easier to identify. If this floor gives out, realistically, you're probably looking at the test of 15. I would expect, at least. There's just this floor, and then there's nothing until that old resistance level and that nice round number at $15. So if this floor does give out, personally, I will expect a little bit more selling within silver. I think the floor has kind of developed a little nicer because we kind of stopped there on Monday. And so we've had 3 days to really build the floor in silver, which doesn't seem like a huge deal, but to me, a lot of times it can be. Hasn't happened yet, may not happen. Still have a lot to get back on track. If silver wants to get back on track, first things first, we got to break above this old support level, that 200-day moving average. In my mind, until that happens, I couldn't understand the bullish argument, at least where we are here today. I wouldn't make the bullish argument there, but I wouldn't hate it. I wouldn't dare buy silver today. I'll say it that way. Beyond that, we got that 1550. So we're really looking at 15 and a quarter, and 1550 is kind of the numbers right now, I think, on silver. Starting to slow down a little bit, but that floor, well, we're close to the bottom of it right now, so it better hold, or we'll get to see if it will build that space. But there's not a lot of support, beyond that until we get into that. And that is a lot of support, right? At that $15 mark, that is a lot of support. Definitely something that should entice buyers. I won't be one of them, but it should entice them. We will have to see. As we look at natural gas, natural gas, you scared me for a minute early, but, and good afternoon, Derek. But thankfully, you decided that I at least get one more day to think about you, and I appreciate that. Natural gas. Natural gas is one of my favorite things. A few years ago, Coach Mark and I hung out in my kitchen all summer long, just talking and trading natural gas. So it has we went a little overboard, but it has a special place in my heart, and I'm really enjoying seeing it maybe develop into a tradable signal here today. We worked pretty close to the top of that trading range. We did give up, at least today, weren't able to break through it. Those of you who know Coach Mark know that we're developing a little bit of a pinch too. At least we're potentially doing that, where we've got a rising 9 keeps pushing us up. We've got that falling 50 to contend with, then yeah, that's something that we probably should keep an eye on. If we can push through that, I think that's a very solid bullish signal. And I might take a look at UNG if we are able to do that. Now, I would love nothing more than to have this conversation next week. If we can have that next week, if we can stay in this range for just a couple more days, and again, I'm used to natural gas never giving me what I want, so I'm always scared. But it's been treating me pretty nice lately and being pretty well behaved, behaving more like natural gas, in my opinion, than maybe it had been in the previous months. I think a break is a good, solid signal. Whether you trade it or not, whether I trade it or not, obviously that's up to us and our stomach for trading natural gas. So if we can stay in this range a little bit longer, I think that is a pretty nice little signal above 3 a little bit more conservatively. But I think there's reason to believe that it at least wants to try. And we are seeing that 9 continue to hold and push us up off of as a support zone on the intraday. We've got resistance. We've got the 50. So let's not get ahead of ourselves. We haven't broke it yet. And we very well may not, right? Who in their right mind would buy a chart at this place? I don't know anybody who would. There's a lot of overhead. So if we can take that out, I think we can look at that as a bullish signal. Personally, love to have this conversation on Monday. Love. I don't even have to wait until next Wednesday. Just want to have this conversation on Monday. And I think that can be very exciting. And lastly, over in crude, really not a whole lot to see here. Back and forth, still stuck within this trading range. We know the numbers. We've got our support down here just shy of 55. Our resistance up here at around 58. Anything in the middle is just that, the middle. So unless you're intraday playing it, I don't know what what else you're supposed to do with it. Other than that, a break either way, absolutely, in my opinion, is a signal and a tradable signal. At that, I would not argue against selling below 55 or buying above 58. I think, for me at least, one of those two things has to happen before any directional plays can be made within crude. We're just stuck in a little bit of a range. But you guys know me. I like those ranges. I'm still trying to figure out how I feel about $59. And I appreciate every day that I don't have to make a decision on that. We do have a lot of price action there, but we've really kind of established resistance at 58. I'm not quite sure just yet. I get the argument if you don't fear $59, this old resistance, this old support, there's really not a lot until 62. 58 to 62 is a pretty decent move, if we're able to get it. If you are afraid of the 59, it's just $1, right? It's just $1 that you can make it get through. I know me. I'm feeling brave because I don't have to make a decision, but I know me. It's got to go above 59. So one thing you have to do is be honest with who you are. No doubt about it. Below 55, I think you could make a case. That would be a failure of support. We'd be below our short-term moving averages, fail the breakout point. We would not have, taken out our previous pivot back here. So that would really be the argument, but really not a lot of support. Even if I'm not looking at it from a bearish point of view, a break of 55, I would expect it to sell a fair amount, a couple of dollars, until we work into maybe this 50-period moving average or this old low in that 52, 52.50 range that we saw, back in early February. We'll see where this one takes us. Right now, we are stuck right in the middle. Great place to be because you get plenty of time to think about how you would play either side. What do I do if it breaks 55? Would I do anything? What do I do if it breaks 58? Would I do anything? Am I talking, the commodity itself, cash flow strategy, just long the ETF? We get time to think about how we might want to play this. This is another reason why I love things that do nothing for a long time. I get to, think about it exactly how I'd like to play it if things do shape up. So there we find ourselves, again, we're just seeing a little more selling and we are drifting a little more to the downside. Definitely some weakness in the Russell, some weakness in the healthcare sector. So this is really the first time in a while that, for me, there's some pretty things. Yeah, you kind of need to stay away from them overall. We're seeing some bearish signals that I do think you have to respect in the RUT and healthcare sector ETF in particular. Enough to go bearish. I'm not there yet, at least across the board, individually speaking. Sure, I am always there. But, we've not seen that, right? For a long time, where were the sell signals? We didn't see any, right, on anything. In the stock market, we're starting to see some. We're starting to see some that, that's a bearish signal. So let's just kind of be careful. I don't want to be doom and gloom. I don't think it's enough to, firmly believe that the top is the top. It makes perfect sense. Nobody's buying at resistance, right? And the longer it goes with no one buying at resistance, well, if no one's buying, probably going to drop a little bit, right? It's not been dramatic for the most part. So I still think for the most part, we're looking at this as a pullback. But for me, at least there's a little more weakness than we have really seen all year long, in a couple of areas, the Russell and and again, it's just one day, but it's how it always starts, right? It always starts with the first day. Let's see how we follow through on those things. So that's where we find ourselves after, we're moving, we're still really below, and really the easy trades are going to be when we break resistance, at least the easy bullish trades. Once things start breaking resistance, being a bull should become really easy again. It was we probably got a little spoiled throughout much of the year. Just being a bull was easy, right? And I would expect once, and if this is the way we play out, obviously we start breaking resistance in the market, it should be easy for a little while to be a bull as well. It's tough. No one wants to buy at resistance. I don't blame them. I don't want to be the person buying resistance. I don't want anybody I know to buy at resistance. So, yeah, exactly. Gidget. Some are looking a little weaker. I love these sideways ones, though. I love that we're seeing some things stuck in these little several week sideways markets. And my favorite thing, I love the K-trade style setup. So, ladies and gentlemen, that's going to do it for the market recap today. But as always, it is certainly my pleasure. I appreciate everybody's time. Thank you so much for joining me. Always fun to do this with you guys. If you are new around here, be sure to subscribe to the channel and hit that notification bell. And be sure to join us over at Tackle Trading on Twitter as well to keep up with some of the stuff that we're bumping in to throughout the market day. You can also find me at FrankMartin23 on Twitter as well if you're ever looking for me over there. So if you enjoyed the market recap, it's always helpful and appreciated if you do give it a thumbs up. That just lets us know that we're on the right track and lets YouTube know that we're helpful as well. So thank you very much for that. With that, ladies and gentlemen, thank you very much. Thank you, Ryan. Thank you, Gidget, Derek, Thiago. Always great to see each and every one of you guys. You guys have a fantastic evening here. It's a Wednesday, halfway through the week already, and another snow day in Utah. I'm tired of them, but they're not tired of me. So thank you so much, guys. You guys have a fantastic Wednesday afternoon and an evening, and I will see you, same time channel here tomorrow afternoon. Thank you, everyone.